Do you agree with Kathy's bullish views on Tesla, or do you have different opinions? Although she has always been optimistic about Tesla, what are your current feelings on the company? We'll get a glimpse of what Tesla is working on right now in this video, along with opinions from investors like Kathy. We'll also provide you with a brief profit forecast, which should aid in choosing your next course of action. Now let's begin this video without further ado. Make sure to hit like and subscribe on Tesla stock news first, though. The Cybertruck might get as mainstream as the Tesla Model Y, according to ARK Invest in a recent piece about the electric vehicle. Excitement has been stirred by this astonishing revelation. Let's examine this fascinating subject in more detail. Previously, forecasters, analysts, and automakers believed that electric cars, EVs, would stay a niche product. It seems, nevertheless, that they were also misguided regarding the Cybertruck's potential. These low expectations are contested by ARK Invest, which also draws attention to an industry blind spot. Currently, a lot of manufacturers use the money they gain from selling gas-powered trucks to subsidize the development and marketing of unprofitable electric vehicles. It would be extremely problematic for traditional automakers if the Cybertruck were to upset this business core. This is a given, not just a possibility. Though a little late, several automakers, like General Motors, are showing signs of life as they're finally taking the correct actions. Then, ARK Invest goes back in time, showing how the U.S. Energy Information Administration, EIA, forecast that long-range electric vehicles would have little to no market share in the country by 2040 in its first year of existence in 2014. Remarkably, just 1 year ago, the United States market share of EVs surpassed 5%. The EIA must have drastically changed its forecast, presumably anticipating at least a 50% market share, one would think. Even so, though, it would be viewed as bearish. It is noteworthy that by 2030, 2035, and 2040, a number of states and areas across the globe intend to outlaw the sale of gas-powered automobiles. When generating projections, these aspects would surely be taken into account. ARK Invest has been outspoken in its disapproval of the EIA's forecasts, even speculating that the intelligence underlying them has soared. They have doubts about the EIA's capacity to predict the future of the market for electric vehicles. The aspirational aspirations of established automakers, such as Ford and General Motors, are emphasized by ARK Invest as proof that the electric vehicle revolution is well underway. They stress how these established automakers are making significant investments in electric cars, indicating a move in the direction of a more sustainable future. The idea that EV adoption is just a niche trend is called into question by actions like these taken by well-known industry heavyweights. ARK Invest seeks to undermine the EIA's forecast by highlighting the progressive tactics of firms such as Ford and GM, implying that their evaluations fall short of fully realizing the potential and propelling the expansion of the electric car industry. This critique confirms ARK Invest's opinion that EV adoption will be widespread and that transportation will become more and more electric in the future. While GM intends to transition to all-electric vehicles by 2035, Ford anticipates 40 to 50% of its worldwide car volume to be electrified by 2030. ARK Invest concerns the numbers that the EIA is using, particularly in light of the fact that a number of states in the United States, California alone accounting for roughly 13% of the total market, plan to outlaw the sale of gas-powered vehicles after 2035. It becomes clear that the EIA's forecasts are inaccurate. I'm happy with these forecasts despite my seeming irritation because they offer us investors a great chance. The government is not the only entity considering a slow adoption rate. Fund managers and individual investors are also unaware of the situation. Although I don't think the rate of EV adoption will be as sluggish as the government agency predicts, I have to admit that not everyone can be as misinformed as they are. It appears from past world trends that they do not understand the idea of exponential development. Furthermore, even though electric trucks are expected to have a market share of less than 10%, the EIA projects that trucks will make up 69% of all vehicles in the United States by 2050. However, ARK Invest is not in agreement with this prediction. They also indicate that 1.5 million reservations have already been made for the Cybertruck, which raises the possibility that electric trucks may succeed. Early Google Trends data sug not be great if it's too pricey, but they may skyrocket if Tesla can provide a more reasonably priced model. Investment firm ARK Invest continues to emphasize that even while sell-side analysts would be uncomfortable projecting the electric vehicle industry to develop at an exponential rate, it would be a mistake for them to overlook the possible consequences of the Cybertruck's success for conventional manufacturers. According to ARK Invest, global EV adoption may reach 70% by 2027. This number sounds high, yet it's not completely unattainable. Experts are debating the Tesla Cybertruck's quality on Twitter in response to a picture that has been making the rounds. It's important to remember that the Cybertruck is currently only a prototype, but given that the Model Y has emerged as this year's best-selling car, it is reasonable to anticipate that Tesla will continue to produce products of a high caliber. Most likely, any first worries regarding quality may be addressed and fixed. Cathie Wood spoke about Tesla's AI strategy recently on Bloomberg. She brought up the network of driverless taxis that Tesla is reportedly developing. Compared to other auto and tech businesses, Tesla has a substantial advantage in terms of proprietary data and actual driving miles. With the uncertainties of the Chinese market removed, Wood thinks there is a huge opportunity in the autonomous taxi space, with a business that can safely and quickly transport people from point A to point B predicted to have a dominant share of the market in the US. Wood thinks Tesla will be that business, and by 2030, this potential might bring in trillions of dollars worldwide. For this reason, Wood and her colleagues are especially enthusiastic about Tesla's artificial intelligence, AI, developments, and the company's growing manufacturing efficiency, both in factories and in automobiles. Although some might consider Cathie's excitement about Tesla stock to be excessively optimistic, a more thorough examination of her background indicates an incredible success rate, specifically with Tesla. I completely concur with Cathie's points of view, especially her emphasis on how important fully autonomous driving technology will be for Tesla in the future. Cathie is deserving of recognition for her outstanding results in the Tesla stock market thus far. Notably, Cathie's choice to hold onto her Tesla stock when it rises above a 10% allocation cap has paid off. She has shown that hanging onto these positions may produce remarkable returns, even though she is unable to expand her holdings after the stock crosses this level. Her performance in the last 5 years would have been much worse, roughly negative 10%, if she had sold Tesla stock each time it rose above 10%. During the COVID-19 pandemic, our connection with China has been particularly interesting. At first, we invested heavily because we thought China's fiscal and monetary policies had potential. However, things have drastically changed since November 2020. We decided to drastically lower our exposure in China as a result of the harsh limitations and rules that management teams had to deal with. There is a new notion of common prosperity, which suggests smaller profit margins and fewer services that are available solely in Tier 1 and Tier 2 cities. Even though we are still somewhat involved in JD Logistics and JD, we have reduced our exposure till China opens up to foreign investment once more. Despite my deep affection for Tesla stock, the one thing that worries me is that it is susceptible to fluctuations in the US-China relationship. But I think the majority of this worry is short to medium term in nature. Over time, China's importance will progressively decrease as a result of Tesla's goal to diversify its operations and build gigafactories in multiple nations. Furthermore, even in the worst-case situation, in which trade restrictions and tensions increase, Chinese businesses would find it difficult to enter Western markets, while Tesla might have trouble selling in China. Such a condition might not necessarily be harmful, given that China is likely to develop formidable competitors in the long run. We would appreciate your support if you liked this work, so please like and subscribe. We appreciate your time and hope to see you in the upcoming video.